Welcome back guys to my YouTube channel. So I haven't uploaded a video in a year and I'm proud to announce that I'm back, and this time I'm back for good. My focus still remains the same. I'm going to focus on uploading videos that relate with forex trading, trying to help others understand how this whole thing works. I'm going to try my best to do that. So for the first, I am going to be uploading like videos in terms of series. For the first series, I'm going to be formulating my strategy from the actual beginning, from what market structure is to finding an actual playbook that works, and we're going to backtest it for like 3 months straight. All that is going to be documented on my YouTube channel. So if you are interested in that, don't forget to subscribe and share if you know a friend who also wants to learn more about forex trading on YouTube. This is the first video in the series. So in this video, I'm going to incorporate what market structure is, the 3 phases of market structure, how we can understand market structure, and how we can use that to see opportunities in the market, which you can then use to make money. Yes, so what is market structure? Basically, market structure is the condition of the market. Is it in an uptrend, or is it in a downtrend, or is it ranging sideways? What I mean by an uptrend is that the market keeps pushing high in the long run, and what I mean by a downtrend, market keeps pushing down. Then a sideways market is one which you call a consolidating market. So what do I understand by the word trend? A trend is something that has been going on and has been caused by a certain influence. For example, Crocs are trending. Yes, so when I say the market is trending, it means the market keeps going in a certain direction based on some influential factors. Yes, so an uptrend is a type of market which keeps going up. It's basically just that, guys. The market keeps going up. Come with me to the book of life. So what do we now do with this information that we have? So basically, guys, the market has 2 main movements, which are the impulse and the correction. Impulse is self-explanatory. The correction is like when the market decides to rest a bit, to take a breath before impulsing again. Yes, so in an uptrend, the impulse is always to the upside while the correction is to the downside. So this is what a typical uptrend would look like. An impulse to the upside, the correction is to the opposite side, even though this move won't be as big as the impulse. So something like this. Since it's in a trend, price will keep impulsing to the upside. This market is in an uptrend, so we're going to get another impulse to the upside, then a correction that follows. Impulse and correction. Same goes to a downtrend. It's basically just the opposite. For a downtrend, the impulse is to the downside. So price is going to push harder down, then the correction is up, meaning price is going to push softly up. Since this is now a downtrend, price is going to impulse downwards and correct. The cycle continues. So now that we know this, how can we use it to our advantage? In an uptrend, even though the ideal idea is to buy, we're going to avoid buying from the highest points. Instead, we're going to buy from the lowest points. So after price impulses, we're going to wait for a correction to happen so that we buy at a lower price, then wait for price to continue going up. That's the main idea. In a downtrend, the main idea is to sell to make money. So we're going to avoid selling from low points. Instead, we have to wait for the market to correct upwards, then we sell. Have you gotten the concept? We're not going, like, I see most of you traders, you wait for price to impulse down, like when you see big red candles, then that's when you want to start selling from. No, after those red candles, you're going to want to wait for price to correct a bit. Then when the correction ends, that's when you sell. So this is the 1 out of 300 of backtesting my strategy. Yeah, so let's get to it. Let's start with GU, but on a different chart. So I'm going to backtest the whole of last month, which is July, and see if we're going to get 10 trades. If not, we're just going to keep going back and back and back and back. Oh yeah. Let's see what we got, bro. Let's see what we got, bro. Go to daily time frame. Now let's go to the daily is a max. So July is here. Easy. Those 30 candles. Okay, so let's mark out where July starts from using a vertical line. Right here. That's where July starts from and ends. Right here. So I'm backtesting the whole of July. Yeah, so we're going to backtest within this period. Yeah. Let's go to let's go to the 4 hour. What did I do? Yeah. So let's go to the 4 hour. Let's go to the 4 hour time frame. So that's like where July started from, right? Let's get our 2, our backtesting 2, and like from here. Yes, so it has officially begun. Day 1 out of 30. I said 30 days, right? Or 300 days. But I think I said 2 months or something. Yeah, so currently, according to my strategy, on 4 hours is downtrend, right? So I'm going to try and mark it out. Something like this. Then on the 1 hour, so 4 hour we're looking bearish. 1 hour, according to the strategy, it says at least 2 touches. Make a trend line with at least 2 touches. So it's giving us counter vibes. So from here, it's either price breaks out. So it's either how do I do this? So it's either price breaks out of here, breaks above this high, so break out of the high, come down to the chest, and you keep buying, or price keeps going down. So let's see what happened. But what's this? Yeah, let's see what happened to price. Just adjust this a bit. Oh yeah, just adjust this a bit. See what's happened to price. And what time was this? This was 21 hours. So according to my strategy, I wouldn't have taken this trade. This is at 21 hours. So price broke this structure as expected, but not impulsively. So after this, we're going to look for a retest on these same structure points. made me go for a buy. So what time was this? How do you do that thing? This was at 04 hours, so realistically speaking, you cannot take this trade. Yeah, go ahead and delete that. But according to the strategy, this would have been a buy if we went deeper to a 15-minute time frame to look for good candlestick confirmations. Let's see what happened. The candlesticks are not giving, guys. So, yeah, I would have bought after this structure point has been broken according to the strategy. So I'm going to take this as our first trade. Here, stop loss right here, which is like 14 pips, and I'm going to be looking for the next target on the 1 hour. So which is like my expectation for price to go at least maybe times 2, so somewhere here. Let's see how this played out. Let's see how this trade played out. So I would have taken an entry there. So as you can see, yeah, so I'm not sure what happened, if it was stopped out first or it hit TP first, but looks like it hit TP. Let's go to 15 minutes. So the trade hit TP, they went to stop us out, so I'm going to count this as our first win of the strategy. Yes, I'm going to count this as our first win. And let's see how long it took from when we entered. What is that to again? Let's go to the 1 hour to see how long it took, because that's also important to build your confidence in your strategy. Like sometimes it takes long and stuff. So it took for the duration, not price range. What is that? Is the range from when we entered here to when it hit TP. So it took 14 hours to hit TP, right? Yes, it took 14 hours to hit TP. So I'm just going to note that down in the book. I'm going to show you the book after I finish back testing. Yes, so our first trade was a win.